Moneyweb at midday for all your up-to-date stories.
Operation Vulindlela says structural reform is beginning to unlock investment and improve state performance, with progress reported in electricity, in freight, rail, water, visas and digital government. But its latest quarterly assessment also shows 40% of reform actions are delayed or are off track. And I think that raises questions about whether policy activity is actually translating into results that ordinary South Africans can see. Well, someone at the centre of all of this is Rudy Dix, who's head of the Project Management Office at the Private Office of the President. Rudy, welcome back to the programme. So is Operation Vulindlela genuinely changing the economy, or as a result of this latest report that we see, still producing plans, laws and institutions rather than measurable results?
Hi, Jeremy. Thanks for inviting me. Well, as I said, I think it's important to contextualize it, right? And not spinning. When we say that 40% is off track, it doesn't necessarily mean that they're not being implemented. They're slightly off track because, as I've explained, there may be technical aspects. So let's deal with two of them, right? Energy reforms, and particularly the most fundamental reforms that we have never seen in the last 30 years in our energy space. The formation of the wholesale electricity market and, of course, the unbundling of Eskom. What we are seeing is getting into much of the weeds and the details, and therefore requires additional technical work. So they're slightly behind schedule. But the work and the momentum continues. And I think that's really the important thing to understand. Similarly for logistics, we spent a bit of time on getting a network statement that's bankable, that can get third-party operators, private sector operators onto the rail network so we can unlock additional 24 million tons. That needed quite a bit of work to ensure that we get an agreement on the network statement. That's really it. It doesn't necessarily mean that we are not committed to the reform program. It means that we're getting to where it really matters, the nub of issues that require for us to now say this is how we're going to unbundle Eskom and create a transmission system operator. This is what we're going to do in logistics in moving forward. And that, I think, is the important point that I want to make.
Not quick enough, though, to meet the needs, the urgent needs of the economy and its growth.
Well, certainly, of course, but reform is a slow process, isn't it? Unfortunately, I think there's huge amounts of expectation. We still stick with the numbers, both independently done by the Bureau of Economic Research and, of course, internally by Treasury and South African Reserve Bank. But the reform is an important basis for us to catalyze economic growth. And we still think that if we fully implement the reform aspects that we've announced in phase 2, that we will hit 3% by 2029, as we've set out.
Let me pick you up on the wholesale electricity market that you referenced, due to open externally early next year. But I think the question is, how can a competitive electricity market succeed while municipal distributors remain financially broken and distribution reform is still facing significant challenge?
Absolutely. I mean, I think that's really the crux and the nub of it. And if you had noticed, for example, the report that we released, I think there's a press release that we've issued early today or late last night on the Eskom restructuring task team, you would have noticed that as part of the unbundling and creating a transmission system operator, we have set up a separate work stream under that by the two Director Generals, the Director General in the Presidency and the Director General in the National Treasury, to particularly address fundamentally those concerns. Because you're spot on. If you're going to set up a wholesale electricity market, you've got to fix the distribution and allow also municipalities, for example, or to utilities, distributed electricity distribution utilities, to participate in that market. So it is a fundamental. And what is that? Financially sustainability. It's why part of the reforms is to ring fence those utilities so that you are able to pay for the bulk electricity that you buy, professionalize it, but also ensure that you invest in maintenance and infrastructure. So that's quite critical. A lot of the interventions that we've done over the years have not achieved the desired results. So we've got to think about the long-term reform around it. But your observation is correct. We've got to deal with EDA and we've got to move with it as quickly as possible to ensure we can have a successful competitive market.
All right, let's move on to rail that you also referenced. 11 private train operators, if I've read this correctly, have signed rail access agreements. But again, the question is, when will businesses actually see more freight moving reliably by rail?
Well, certainly we've seen some significant progress. I think not knocking on to the 200 and 250 million tons. The minister has set 250 million tons as the target for 2029, 2030. What we have seen from the low of 2023, when we were doing 149 million tons, we're now pushing at about 168 million tons in the last financial year. The private train operating companies would see an additional 24 million tons. So that's an important part as we move towards the target. A lot of it is dependent on the ability for us to be able to raise capital, both internally through the budget facility for infrastructure, or design concessioning deals, private sector participation on fixing the rail network. It is really the rail network that is in a dire state, Jeremy, that requires for us to be able to make that investment so we can get more volumes on the iron ore line, on the NATCO, the line that runs from Johannesburg, which is our container line, on the coal line, or on the chrome line. It is really a fact of us being able to put huge amounts of money quickly and fast in partnership with the private sector to ensure that we maintain and fix a broken system, a broken infrastructure, a rail infrastructure, so we can get greater volumes. And what we're doing is, of course, ensuring that we can support the maintenance that Transnet is busy doing, and the budget facility for infrastructure is an important aspect of that.
The other big issue, of course, is water. It's a big problem, particularly in urban South Africa. The water project pipeline, I think it's valued at around 100 billion rand. How much at this point, Rudy, is fully financed? How much is under construction and actually delivering water as we speak?
Well, a lot of them are already in quite advanced stage. So you're correct, it's 100 billion. About 60 billion of that is close to financial close. And so we are able to ensure that we can move towards construction and announce commercial operation dates. There has been a kink in our sort of value chain of getting it from project pipeline into bankability, COD, and then, of course, the actual construction. Part of it is now to ensure that the infrastructure fund of South Africa and the water partnerships office are able to unlock that. We set a target because we don't want to continue hearing about a project pipeline, and that's quite an important part. And the target is both at a wholesale level or at a raw water pricing level, at bulk, and then of course also at distribution. So we've got to move pretty fast and get many of those projects into construction, and that's a critical focus of the National Water Crisis Committee, Jeremy.
Rudy Dix, thank you very much indeed. Head of the Project Management Office in the Private Office of the President.